Good morning, everyone. I will record this myself and dive in. We're going to talk about the down payment assistance programs in LA County and LA City right now. You'll be amazed how many calls that you can receive just by telling people that you have this product. So I'll take all the questions after the training is done. All right, let me start with the reason why I made this training today. Yesterday, I had the webinar. About 67 people stepped in, joined the call, and they all talked about this product. Didn't know the Green Line product can combine with LIPA, MIPA, and HOP altogether. So these buyers that I'm talking about are dream for all dropouts. So when I talk to someone to convince the rate or the monthly payment, it was very difficult. But once I plug in this down payment assistance program by lowering the loan amount that they need to borrow, the conversation became very easy. All the price tags in the LA are somewhat scary, and interest rates has been going up significantly higher than we anticipated. So with all these in line, saving up a down payment feels like trying to, fill a swimming pool with a teaspoon, right? With a cup. So here's what most people don't know, that these down payment assistance programs, LIPA, MIPA, or LIPA, MIPA, HOP can be combined with Green Line. So from the county to the city to the nonprofits, these programs exist for one specific purpose: to help first-time home buyers like you cover the down payment. So I'm not going to talk about saving a couple $100 here. It's going to save at least $1,000 monthly payment, and this money that you will receive, you'll never have to pay back. Some of them you don't have to pay them back. So the problem here is almost, I don't know if any of you did the cold calls in the last 30 days, but I highly encourage you to do so, as the number of openings has been just tripled. So let's dive into it. So this is what we're going to talk about. Let's talk about the big picture first. Why down payment help is such a big deal in the first place. And I'll put all four programs side by side so you can compare them at a glance. And after that, we'll go one by one into each program in detail. Green Line, HOP, LIPA, and MIPA. Then I'll give you a simple way to figure out which one actually fits the situation. And we'll walk through the process from start to finish. And at the end, you'll be able to answer any questions that's coming in. So let's start from here. When people think they can't afford a home, they almost always blame the price. Home prices are too expensive. Monthly payments are too much. But for most first-time home buyers, the price isn't actually the wall they hit. The monthly payment, mortgage payment, in a lot of cases, isn't that far off from what they're already paying in rent. The real wall, the thing that stops the people the most, is a lump sum of cash you need to bring in as a down payment, plus the closing cost. That pile of money you need it all at once before you get the key. So that is exactly what these programs are built to attack. And these numbers, Green Line can give you up to $35,000 as a grant. Across these programs, your own minimum contribution can be as low as 1 to 3%. The second loan carries 0% interest. And this is big one. Many of them can be stacked, combined together to grow the total assistance programs. So this is the map of all four programs. Don't try to memorize every box. And I'm going to walk through one by one, so you'll be able to take a look. The four programs are Green Line, HOP, which has two versions, 80 and 120, and LIPA and MIPA. They'll run by different organizations. Green Line by a nonprofit organization called NHS, HOP by LA County, and LIPA, MIPA by the city of LA. Here's the first thing that matters, the type of help. Look at Green Line, it's a grant. That means it gets forgiven, you don't pay back, and the other three, HOP, LIPA, MIPA, are the 0% interest second loans. Still great, still no interest, but they are the loans. So you have to understand how to stack these. So here's a second thing that matters. So this row, when we talk about the shared appreciation, Green line says none. The others say yes. So hold on to that because we're going to come back to it. Simple terms, green line, when your home goes up in value, you keep it all. With other three, you share some of that gain when you sell. You can also see the maximum assistance for each. $35,000 for the green line, up to $100,000 for HOP, and up to $161,000 for LIPA, and $115,000 for the MIPA. And this is a quick note. HOP 80 is closed right now, but it's going to reopen in June and July, end of June and early July. So let's look into this chart. Who qualifies? There are 4 programs, and there are really 3 things that you need to decide: income, status, and whether you're a first-time home buyer or not. And look across the bottom of the 2 rows here. The 4 require that you need to be a first-time home buyer, and 4 require to be a U.S. citizen and or permanent resident. Those are universal. So the real difference comes down to your income band and where the property is located. So you need to look into the income limit of green line and HOP 120. It goes up to 120% of the AMI, and LIPA only caps at 80% AMI. So the price cap differs as well. So when you see this column, with HOP, 1% has to be your own fund, and some of the other program and product can accept gift funds to cover the 1% requirement. But with HOP, you need to bring it up. Our own contribution has to be applied, and these numbers update every year. So look into the DPA Excel sheet that I also share with you guys if you want to know more in detail. So there are 3 gauge that every single of one of these requires. So because if you don't clear these, you can proceed forward. Let's deep dive into green line. So this is a program run by a nonprofit called NHS, and the reason why it's special is because it's a grant. Specifically, they call it recoverable grant, which means you have to live there for the next 36 months, 3 years. And then after that, the entire amount is forgiven. So you don't pay back, no interest, no monthly payment, nothing. The maximum is up to $35,000, because if you look into the underwriting guidelines of the first trust deed, combined loan to value maximum is 105%. So when the home price is under $430,000, then you may not be able to get full $35,000. So this amount, $35,000, can go towards the down payment and the closing cost. So even if you don't have any funds to close, you can also use this funding and get it done. And this is the income limit that has been updated a couple days ago. So good news is that more people can qualify than before. For a single person, the limit is under $139,000. For family of 4, it's almost $199,000, $200,000. So all the way up to 8 people at $264,000. So if you compare this to the Dream for All income limit, you'll be able to compare side by side. And I want you to notice how high these are. A lot of people assume these programs are only for very low income, but they count themselves out before they even ask. So look at these numbers and consider all the LA purchase transactions with sales price under $750,000. You can add them in. And there is a subordination fee, LLPA fee of 0.625. So when you price out the loan, you make sure you add that in. And let's talk about the HOP. HOP product, both 80 and 120 has been increased to for $100,000 or 20% of the home price. So maximum sales price with this product is $700,000. Investment cap means even though you have a lot of money, you cannot use more than $150,000 to close this transaction. And income limit is at 80% AMI, and following by the HUD income limit. starting from $93,000 all the way to $175,000. And important note is these are right now closed. They're going to reopen in July. So if this is your track, the move is to get everything ready now, so you're prepared the moment it opens up. HOP 120 is a middle income track for households up to 120% of the AMI. Same maximum loan structure, but maximum sales price goes up to $850,000. Investment cap here goes up to $200,000. So this actually helps more home buyers to actually plug in. The income limit on the right figure right now is for 2025. 2026 number hasn't been released yet. So if you have any applicants that's exceeding this income limit, accept the and when the new income limit is released, then it's never too late to pull the credit and complete the underwriting income. HOP eligible areas, it is specified into two categories. First is you need to understand what these means. So HOP only works in two kinds of places: the unincorporated area of LA County and a specific list of partner cities. So what it means by unincorporated cities mean that the cities without city halls. Just consider that as a baseline. And you can see some of these partner cities here in the list as well: Arcadia, Azusa, Beverly Hills, Calabasas, Culver City, Temple City, and more. So here people get confused the most. So let's make it simple. If the property is inside the city of LA, they usually go into LIPA and MIPA. City programs we'll get into. If the property is in unincorporated county area or one of these partner cities, then it becomes an HOP territory. And there is a small detail. Few cities like Bell, La Puente, South El Monte are HOP 80 only. So I know that's a lot. So let's try to itemize one by one without guessing. Let's dig in a little bit more about HOP. This is very different than all the other products. So when you sell the home, when you transfer the ownership, or when you share the net appreciation, the gain in value with agency is listed in the chart. So if you sell in the first 5 years, you have to split 50% of the equity increase. 6 to 10 years, you keep 70%. 11 to 15 years, you keep 90%. And after 16th year, it's 100% yours. So agency share drops to 0. So for those people who's going to actually live longer, fits better with HOP product, and who's thinking of using this down payment assistance program as a stepping stone, this can be an option, but you can also sell LIPA and MIPA and Greenlight at the same time. So let's look into LIPA programs and MIPA programs. Which one applies to down payment as a second trustee? LIPA is for low-income first-time home buyers at or below 80% of the AMI. And this is why people like this program, because maximum loan amount is up to $161,000. And because of this, the down payment difference is minimal versus the monthly rent. So like the others, this has 0% interest, no monthly payment, and it does have a shared appreciation. I'll go into it more detail. Contribution amount is 1% of the sales price, and 80% asset rule apply. I'll explain that in a minute. The credit score, preferred credit score is 700 because we can go up to 50% DTI. But minimum credit score is at 660. MIPA, on the other hand, very similar, but the income limit is different. And the maximum loan amount is dropped to $115,000. All the other rules apply the same. This is a chart. So if you look into this income table for both, this is how you figure out which one you're in. First, find the household size, and then look into the total income of the household. If the combined household income is at or below the number on the LIPA column, you're looking at the LIPA. If you're in the range of the MIPA column, that's MIPA. So for example, family of 4, at or below $133,000, that's LIPA. Roughly between $120,000 to $173,000, that's MIPA. So 2 things to remember. MIPA 2026 income limit also hasn't been released yet. It's still pending. So if they get updated and when it grows, it's combined income for everyone in your household who's 18 or older. So anyone that you are applying right now has a family member at 17 years old, please ask the house member or loan applicant when this person will become 18. That will differentiate the qualification details as well. So this is the major portion that the loan gets denied for LIPA and MIPA products, this 80% asset rule. The 80% rules apply this way, that when non-retirement liquid asset and the checking and savings and stocks, for example, all are listed as a type of asset, non-retirement liquid asset like 401k, and then count all of them, and when they are greater than $40,000, you have to the total amount, then use 80% of any amount over the $40,000 towards the purchase transactions. So there are some people who intentionally hide the asset documents, and when we collect the 6 months of bank statements, it's really tough not to deposit or withdraw any stock related or any asset related deposits. So it's tough to hide that kind of a transaction details. So bring it up to the borrower and the agent up front, and then let them decide. If the loan denies and disqualifies because of their misconception, misleading information, that's not on us. But when we incorrectly calculate this 80% rule, we have to sometimes accidentally or intentionally inform the buyer to increase the down payment significantly, which defeats the purpose of applying this loan in the beginning. Because you can also apply no down payment assistance just using Green Line and get it done. So shared appreciation with LIPA and MIPA, it goes hand to hand using the percentage of the future gain. So for example, when you look into $550,000 purchase price, borrowing a LIPA loan at $161,000, equity share is 29.27%. So when it sells later on at $800,000, you calculate the net proceeds plus the amount of money that you borrowed. So $49,905 will be the 29.27% of the gain, and the original loan amount you borrowed of $161,000, total repayment will be about $210,000. So this buyer who didn't have any money to spend now can take some money out when they sell. So this is the reservation date that's been updated since yesterday. We had MIPA closing on July 1st, and we didn't have any openings. But yesterday, some of the LIPA openings have been shrinked from 28 to 20, and MIPA openings has been created for September and December as well. So we have more chances to qualify the home buyers. So these programs especially have no wait list. It's first come, first served product. At 9 in the morning Pacific, the processor has to submit this full set, and according to LIPA's time clock, they have to acknowledge the receipt and send us the reservation confirmation. If we miss this timeline, if you accidentally submit at 9:05 or 9:10, we may end up, missing the spot. So what's coming up right now is June 10th. So what we need to do is understand the eligibility, find the home and put an offer in. When it gets accepted, that's when we reserve the money and apply. And when the when the approval certificate comes out, 30-day counting starts, we order the appraisal, HOA certification, and all these things. So LIPA, MIPA, Green Line, HOP, to consider 45-day closing in the beginning, because the reservation process takes about 3 to 5 days. So which program you need to fit in is the following. If the buyer doesn't want to pay back any money, then start with a green line. If the home is an unincorporated area or partner city, then look into HOP 80 or 120, depending on your income. If the subject property is in the city of LA, and when you have lower income, that's LIPA, and with a bigger loan amount, a bigger income, then you look into MIPA. So a lot of buyers actually qualify for themselves before they apply. They Google search, they try to do the DTI calculation on the mortgage calculator. But if you tell them that you can stack green line on top of LIPA, MIPA, and HOP, then the question now changes from, why you is leading into how much of monthly payment, which loan officer, which realtor that this person needs to work with, so that we can make sure the escrow is opened before June 9th, so that we have enough time and energy to stack the file and be ready to submit. So these are the numbers that you have to keep in mind. Number one, numbers change. Income limit, price capped, grant amount. They update every single year. So right now we're using the information updated yesterday. So everything I showed you today, we confirm these current figures are actually working and can apply. 2, timing matters. Although HOP 80 is closed, LIPA, MIPA, and HOP 120 are still opened. Being ready is your advantage. Now you know it. Let's trace all the Dream for All applicants we had helped and find out who failed them, and then apply these programs one at a time. And 3, status requirement is very strict, but because we went through a Dream for All, it'll be very same. Green card holders or citizenships. And 4, understand the shared appreciation for each product. HOP, shorter the term, more giveaways. Longer the term, after 16th year, no giveaways. All the way to LIPA, MIPA, shared appreciation percentage at the beginning is applied at the final stage. And the 4th would be, again, green line, the grant amount of $35,000 that doesn't apply any of these rules of shared appreciation. Longer term plans, shorter term plans, investment strategies, everything applies. So you can also lead them to get the house they want and refinance later on. As long as they still occupy in the house, we'll be able to subordinate these liens and refinance. And why your buyers need to work with GivingTree, right? Because we are one of the very few companies who has all these programs in the same place. Your buyers and realtors need to go to several different seminars to hear one product at a time, can listen to all 4 at once. And as long as you deliver these presentation and information, there's no jargon, no, difficulties. You may put this in Threads, Instagram, and YouTube, or you may create a custom strategies for individual and post that information online. This will help more buyers and agents. As you inform them, as you are positioning yourself as a tour guide, this is a home ownership journey that you're leading on. You're hand carrying your buyers and your realtors. So more you know, deeper you know, faster you can move and process and fund. Okay.